These are very, very difficult and challenging times in the market. Very nervous. My advice to anybody who is in the markets now, trade small size in Germany. It's actually looking better than the US. Why? The weekly chart, the weekly DAX is below value, way below value. When I plan my trades, first, of course, I put the ticker name, and then I have 4 vertical columns, which I call barriers. And if one of those columns tell me don't go, I will not trade. I will not trade that. I will not even look at that stock. I will not work up the stock. Wow. Wow. Huh. Very interesting. Very interesting. This is writing a note to myself to look at Adobe after the class.
Good afternoon, ladies and gentlemen. I'm happy to welcome all of you on our new class together with Dr.Elder. Today, we're going to speak about markets, different stocks. We'll speak about SP 500 and about current situation on markets, of course. But before we start, as usual, I will remind about risks, because we are here on a class related to trading and investing. I have to remind that trading and investing, this is an activity which is connected with risks, and we need to understand how markets and how trading, how investing is working. And of course, we touched this topic during our class with Alexander as well. For those who join our classes for very first time, or maybe for those who are just joined Admirals, I will say some words about our company. We are brokerage company, so we work for pretty much all over the world. We provide more than 8,000 different instruments for traders, for investors, and different possibilities of platforms together with MT4 and MT5 platform and native mobile app and native trading platform, of course, also available for our clients. I just want to remind that a couple of months we released a new feature for our investors, which is allows where we expanded our offer in terms of fractional shares. We added to this basket also ETFs. So right now it is also possible to build a portfolio with part of different ETFs, like not to buy only a full size, but also you can buy only part of it to manage your portfolio more carefully. And also I want to remind about our Admirals app, where different options are also available for traders and investors. And of course, as we are aiming a lot to provide different types of education, different types of support to our clients. So I want to encourage you to subscribe to our YouTube channel and Telegram channel in order to be notified of our upcoming events, upcoming webinars, and about different recordings and about different educational videos which we provide to our clients. For today's agenda, as usual, to speak about current situation of markets, to it's every time it's really interesting to hear Alexander's opinion about markets, what is happening in the current moment, in the moment of when we have, let's say, this class. We'll go through main markets. Then we will have stocks review for some chosen stocks, and in the end of this class I will explain how it's possible to use Alexander's indicators on MT5 platform, and also I will explain rules of our contest. Before we start, short heat map of previous couple of weeks. So here we see that so the first screenshot is taken from S&P 500. So we see that it's pretty much natural, I would say. So we are it was, let's say, for some companies was, let's say, some big movements up and some big movements down, but overall we see that markets is neutral, like say, according to S&P 500, and pretty much the same picture we also see for Nasdaq, and of course for some stocks which we will look at today, there will be some exceptionals which showed us a big movement up or down. And of course, every time it's a pleasure to have this class with Alexander to hear his opinion about markets, to see how he speak out loud and about different market situation, different stocks. And I'm happy, Alexander, that we are joined again for our today class, and I'm passing microphone to you.
Thank you very much, Roman, for this kind introduction. By the way, I just wanted to mention, I started, for those of our participants who use Twitter, I started this project on Twitter. Twice, my book that you're actually showing on the screen, The New Trading for a Living, there are about 60 chapters, and it is the most popular book in the world, 17 languages. Turks now printing the thing is going to be the 17th. So what I'm doing now, I review all the chapters and I pull out the most essential paragraph or 2 paragraphs from every chapter and post them on Twitter. So for those who haven't read the book, it's an introduction. For those who have read the book, it's a refreshing thing. So in any case, and it's completely free. So I'm not doing any marketing message here. You can sort of have those things coming to you. And by the way, Roman, if you want to copy those posts and post them on your website, you're perfectly welcome to do that. Just find me on Twitter, start copying them and post them in any language that you like.
Thank you, Alexander.
Very, very welcome. So these are very, very difficult and challenging times in the market. And to a large extent, more difficult than usual, more challenging than usual, because the market is watching, there are 2 wars going on, and the market now is especially focused on the Middle East. Basically, U.S. is ready to go to fight. The U.S. has sent 2 aircraft carrier groups, and a group consists of a whole fleet of ships. Aircraft carrier is just the center. And there is also a nuclear-powered submarine lurking below, or maybe more than one. So it's a very strong fist. And the U.S. has served a warning for everybody to stay out of Israel's fight with Hamas. If anybody wants to join the fight, Americans are ready to protect Israel from that second front or third front. So the situation is very stressful, and because of that, the market is nervous. The market is definitely very nervous. My advice to anybody who is in the markets now: trade small size. I'll give you an example. I love traveling, and but I love trading even more. But when I travel, I continue to trade. But what I do, I reduce the size of my trades to approximately 1/8 or 1/10, 1/8 more likely. So I continue to do my homework. I continue to monitor the markets. I put on trades, but my winnings and my losses, which occasionally happen, are much smaller. So I'm fully active and involved in the markets. But if I had a full-size position, I wouldn't be going out on an excursion, or I wouldn't be going to a museum. I would be sitting in front of the screen. But trading, what I call it toy size, trading toy size, allows me to keep my fingers in it when I travel. And at the same time, there is not a lot of risk. I don't have to be, I can be away from the screen more. So that's my recommendation, one of my recommendations to traders at this time. These are not normal times. It'll blow over one way or the other. It will blow over. And a few weeks, months perhaps. But while this is going on and nobody knows what's going to happen next, trade toy size, about 1/10 of your normal size. So you're active and you're learning. One of the things about trades, of course, all of us, when we put a trade on, we want to make money, we want to make profits. That's goal number 1. But there is a second goal, to become a better trader. And when you trade small size, toy size, as I call it, You won't make you won't make much money. You won't risk much money either. But those trades are just as educational as full-size trades. Try it. You will like it. Roman, sorry, I started with this long introduction. Let's look at the charts. Let's examine your charts, and then maybe I'll show some of my instruments. Here we're looking at the at Standard & Poor's. For those who are new to our classes, weekly chart on the left, daily chart on the right, and they have pretty much the same indicators. So there is a pair of moving averages superimposed on the chart, and one is fast and one is slow. And I call the space between those moving averages value zone. Fast moving average is a short-term consensus of value. Slow moving average is a long-term consensus of value. So I want to buy below value, and I want to sell and sell short above value. If you look at these charts, you can see that both the weekly and the daily are in their value zones. They're straddling their value zones. And the message here is very straightforward, simple. The market is fairly valued. It is not undervalued. It is not overvalued. Right? It's fairly valued. And when I look at the market and see this kind of picture, I say to myself, no opportunity here. The opportunity exists when market is inappropriately valued. So if you look if you look at the weekly or the daily chart, you can see when the market is below value, when the market is above value. And here is the second technical tool. And Roman will be talking to you how you can get these tools through Admirals. The second technical tool is an envelope. Markets are manic depressive. And you can see Roman is moving his cursor along the bottom channel. Well, that's the depression area. And if you go to the upper channel, that's manic area. So we want to buy depression and to sell mania. And of course, on the weekly chart, these things happen very seldom. On the daily charts, they happen more often. For example, this market was definitely manic in July on the daily chart. And that's when everybody was buying and I was shorting. And then the market fell and fell hard and hit its lower channel line. Well, that was the place to cover shorts and do a little shopping. The market came up again to the overvalue, to the manic zone, collapsed again, and now it's stuck in the middle. It's not overvalued, it's not undervalued. It's the time to be extra, extra, extra cautious. That's pretty much all what I want to say. Later, Roman, later we'll look at my charts of new highs, new lows, if you like. But really, just looking at this price and indicator chart. Let me just mention briefly the other indicator, the red and green one, is the MACD histogram and the MACD lines, and below it is force index at the bottom, which to me is the best tool for using volume in trading. And the strip in the middle is the impulse system, a censorship system. When the impulse system is red, we're not allowed to buy. When it is green, we're not allowed to sell short. So we can see that the impulse system is neutral on the weekly chart, blue, and it's red on the daily chart, saying don't rush to buy, not legal. Next chart.
Thank you, Alexander. I'm
Sure.
opening DEX 40.
We talked at length in previous classes. I'm looking at the weekly chart now on the left. We looked at length how the DAX was tracing a top, and it's a beautiful top that it traced earlier this year, somewhere between February and June. You can see how DAX pops up for a week and collapses, pops up a little higher and collapses, pops up a little higher and collapses. And you know, at each of those stops, unknowledgeable traders without knowledge, but with plenty of greed, were shopping. If you look at the MACD histogram, Look at, and to me, that's the best tool for measuring the strength of bulls and bears. Look how strong bulls were, let's say, at the end of the year and early this year. Look at the height of a MACD histogram. And then at those little rallies, a MACD histogram barely comes a little above zero. No bullish power, and this is called a bearish divergence. You can also see this pattern on the force index below, bearish divergence. And of course, people who were buying at the top are now doing what the Japanese called sucking air, going like that. What do we do? Well, what do we do? Now we're approaching the time to go shopping in Germany. It's actually looking better than the US. Why? The weekly chart, the weekly DAX is below value, way below value. We look at MACD histogram, it's down. It's about as much down as it gets on the weekly chart, Roman, on the left. Staying with the weekly chart for a while. So MACD histogram is low. Force index, those little red arrows, they show panics. There were two selling panics. And now, even though the DAX is teasing its lows, force index is starting to make a little higher bottom. So we can see how bears are starting to lose force. But the most important message comes from this horizontal strip, the impulse system. And it says the impulse system is red. No buying allowed. You can look, like looking at a lady in a cafe. You can look, but you cannot touch. You cannot touch until the impulse system changes color. It's not a trading system, it's a censorship system. Highly recommended. So the weekly chart says, pay attention, it's too late to sell short. It's actually, it could be a good time to be taking profits on short positions. The weekly chart of the DAX is approaching the buy zone. Not there yet. Now, with this in mind, we go to the daily chart. And of course, on the horizontal strip, we can see that the same message from the impulse system, from the censorship indicator, it is red, buying not allowed. There are three positions you can have in the markets: buy, sell short, buy, sell short, or stand aside. I've got to tell you, stand aside is the only position in which I never lost money. Safe position, right? So here the impulse system says, stay aside, stay apart, but pay attention. There is a very interesting development at the right edge of this daily chart of the DAX. Look, early in October, about 10 days ago, the DAX fell, and you can see this finger sticking down like this, right? Finger or kangaroo tail. And these patterns very often mark reversal points in the markets. If you go to the middle of the chart in August, you see another finger down. Yes. And then after that, if you go to September, you can see a finger up. These things work. These things show that there was a panic. People were buying panic or selling panic, and then they ran out of air. So we had that, the DAX had this bottom in early October. Look at the depth of a MACD histogram, pretty deep. Then the DAX rallied, and the MACD histogram went positive. I call this breaking the back of the bear. Now, the DAX is declining, a MACD histogram is declining. And what I would do, I don't trade the DAX, but if this was one of my markets, if it was something that I trade, I would print out this chart, put it on the wall, and draw with a pen an arrow, a diagonal up-slanting arrow from the early October bottom to the right edge. I want to see a MACD histogram to come below zero and tick up. And that's when the impulse system will stop being red. When a MACD, the red impulse system means depends on the moving average being down, and a MACD histogram is trending lower. When a MACD histogram ticks up, the impulse system will change blue, handcuffs are off, we can buy the DAX. So we're approaching that point. We're not there yet. The question, of course, is, will the DAX take out the October low? It might, or it might not, because the fingers is maybe but I'm not watching at this point. I'm not going to demand a lower low. All I want to see is a MACD histogram below zero and ticks up. So the DAX, I think, is approaching a buy zone. It's not today, but you know, good trades take time to come together. You come into the office, you see something, and you know you have to wait until everything comes together, until the pattern completes. Many years ago, I had a lady friend, actually a German woman, who was a fantastic trader, excellent trader, and she had a wall next to her. She had this niche in her penthouse. In the back was a bookshelf with some books, including mine, and on the left she had a cork board. And if she saw a chart like this, she would print it out, draw it, and stick it to the wall. And so every time she came to her desk, all her things that she has been waiting, looking, planning were there. She was walking past her trading plan. Very simple but very effective way to prepare for good trades.
Thank you, Alexander. Let's look at EURUSD.
Well. Looking at the weekly chart. Just one second. I need to check something on my computer, just to make sure I don't make a mistake. Okay, I got it. So the euro is sinking, and the dollar is getting stronger. Of course, all of that is based completely on fundamentals, because the US is having very restrictive monetary policy, and EU is much softer. On the weekly chart, the decline appears to have paused, and you can see how MACD histogram has ticked up, and the impulse system stopped being red. It became blue. So the weekly chart allows us to buy. And of course, the price of the euro is below value here at the right edge. So we have a permission to buy. We go to the daily chart. And here, there is really not a good signal. We can see how the euro was coming down now for several months, hitting the lower channel and recoiling, hitting the lower channel and recoiling. Every time it came into value zone was a shorting opportunity. So now at the right edge, it's coming down from the value zone again. The impulse system at the right edge is red. No buying is allowed. What I would watch here would be the impulse system to stop being red. If it goes blue, it shows that bears are losing power, and we have a permission to buy the euro. I'm not sure it's going to be a long-term trend, but if we look at the weekly chart, we can see that the euro is now trading at about $1.05, and the value zone is somewhere $1.07. So we have about 200 points to catch on the way up. If there is a normal reaction back to value, could be an attractive trade, but not until the impulse system changes color.
Thank you, Alexander. Let's look at gold.
Well, gold, of course, is a very clear indicator of fear. When I remember my grandmother telling me that during World War I, in dangerous areas, having a piece of gold was money, nothing else. Nothing else was. When American pilots were flying in Vietnam, during the Vietnam War. They carried a survival and escape kit, which included, among other things, some small gold coins, so they could negotiate with locals. But with what's going on now in the world, and especially in the Middle East, I mean, the Ukraine war is moving. Ukrainians are slowly but steadily advancing. It's sort of nothing, no major news there. But the situation in the Middle East is hot and could get hotter. So gold is shooting up, up, up. We look at the weekly chart. Gold is above value. The impulse system is green, which means no shorting allowed. We look at the daily chart. Gold is not only above value, it's above the envelope. Gold is manic now, really, really, really manic. The impulse system is green, no shorting is allowed. I like counter trend trading. So when I look at something like this, I say, well, if there is an outbreak of peace, gold will come down hard. I will be waiting for that. But it's not happening today or in the very near future, I think.
Thank you, Alexander. Let's look at oil.
Again, the increase, the recent jump in the price of oil again has to do with the Middle East crisis. I remember when I forget what it was. I think in the a long time ago, there was the first oil embargo, and there were huge lines in America and everything. People remember that. There is not going to be such a crisis now because America has become a huge oil producer. America is also taking down sanctions on Venezuela, which is right next door, and they pump huge quantities of oil. They were under embargo for political reasons, for good political reasons, but now they're in any case. But in the short run, there is a rally. And if we look at the weekly chart, we can see that the impulse system is still blue. It's not even green. It's not a very strong rally. The weekly chart allows us to sell short. We go to the daily chart, and it's very interesting. It's the impulse system is green, so no shorting is allowed. But look, there is a finger being drawn here, right? Oil opened flat today, jumped up to a week's to a new record high for several weeks, and now it's trading right near the lows. I think there is a bar at, what is it, about 91.5, yeah? So it cannot hold altitude. And I suspect that the oil wants to come down here. The impulse system is green. MACD histogram is above zero, but not a lot above zero. I'll be waiting for a downtick in MACD histogram on the oil chart, and that will be a permission to sell it short.
Thank you, Alexander. And to complete
old favorite, yeah.
To the Bitcoin.
Yeah. Well, did anybody say that a finger, a single bar extending from a tight weave of prices tends to indicate reversal points? There was on the daily chart, it's especially visible. There was a finger down in August, and there was a smaller finger up in September, and there's a really, really long finger near the right edge. This is a very bearish pattern, I think. But the impulse system on both weekly and daily chart says, be cautious, be cautious. The impulse system still green. Give it a little time, and I think it's going to give us a shorting opportunity. But I've got to say, I trade most of the markets that we discussed. Bitcoin is not one of them. I'm just hugely suspicious about that whole thing. So I know Roman always asks me to take a look at this chart, saves it for last. And I can offer you my technical opinion, but I think it's a market that's very, very full of, all markets have some level of dishonesty, but this market really takes the cake. There is a major trial going on in New York right now. One of the biggest crypto exchanges has gone bust. And I hear that there is another huge exchange in Asia. A Chinese guy owns it. Forget. But in any case, it's a very strange business. There is a famous, now retired, very famous, very successful money manager in Massachusetts, Peter Lynch. He was only he was running a hugely successful fund years ago, and he wrote a very good book, One Up on Wall Street. One of the things he says in his book, he only bought stocks in companies that even an idiot could run, because eventually one will. So this is too complicated for this poor peasant. Let's move on.
Thank you, Alexander. I think we looked at all markets. So if you want, you can switch to your screen and we can look at new high, new low indicator.
Okay. 1 second. Let me get there. Okay, can you see it now?
Yes.
Okay, good. So I believe that the new high, new low index is the best leading indicator of the stock market. So on the left, we have the weekly chart of the S&P and the weekly new high, new low index. On the right, we have the daily chart of the S&P and the daily new high, new low index in 3 different time frames. At the bottom, monthly, in the middle, quarterly, and on top, yearly. Because when we say new high, new low, the next question is, over what period of time? Is it a new high for a month, for a year, for what? Of course, most people only watch new highs for the year, but I think there is a great value in watching them in shorter time frames, because then you can, before the stock can make a new high on the in the yearly window, it has to make a new high in the daily and in the quarterly. This chart is updated through yesterday, and we can see that even with this rally that has been going on in October, yearly new high, new low, minus 142, quarterly new high, new low, minus 281, monthly new high, new low, minus 100. So they're all in the negative zone. When we go to the weekly chart, it's minus 1,300. So all of this, all four indicators are in a negative zone, which doesn't necessarily mean that this is sell time, because we want to buy low and sell high. But what I don't like about this chart is that there is no bullish divergence of any kind. If you look, let's say, at any daily chart, let's take this one, lower lows and lower highs, very clear pattern. So I would like to see a bullish divergence, and the market isn't giving it. So this is a sign of market's weakness. There is an old saying on Wall Street. They say it takes buying to bring market up, but it can fall under its own weight. So now with the political crisis going on, with the war going on, people are afraid to buy. Listen to, I told you earlier today, trade tiny size, right? Trade tiny size. So if you're going to put on a $10,000 trade, I suggest you put $1,000 trade, tiny size. And at least I'm saying it out loud. Other people are making those decisions quietly, and because of that, market is heavy. This is not a bullish chart. But, let me show you another chart of the new high, new low index. And this one I like more. This is a chart of capitalization-based new high, new low, capitalization-based. When a huge company like Microsoft or Apple makes a new high or a new low, it's much more important than if some little company makes a new high and new low. And this indicator, capitalization-based new high, new low, takes all the new highs in the S&P for the day and multiplies them by capitalization of those shares. So the pattern that I'm paying a lot of attention to is this. Let's start maybe at the left edge. Let me compress it a little bit. Look here. You see how the red line pops up above the horizontal line? It's a $20 trillion line. So this shows big panic, declines, and then comes up again. And this bullish divergence, the red line was high, now the red line was lower. It marks that we're in the market bottom area. Here it happened again in March. Here was the peak, here was the retest, and the market had a rally. In August, here was a peak, here was the retest, and the market had a rally, although it was pretty short. And now, as we approach the right edge, so here, this was end of September. This was the peak of bearishness. The market went a little lower, and the second peak was more shallow. So this bullish divergence, I keep waiting for it to push the market higher. Hasn't done it yet. But as I said, now is not the time to be trading full size. Now the time is to be trading toy size. The market is nervous. The market is waiting for the news. You don't know, I don't know what those news are going to be. So pull back, softer, softer, softer. Okay, back to you, Roman.
Thank you, Alexander. Okay, so now it's normally, let's say, on this part, so we talking about, let's say, our winners about our contest. Today we don't have a winner, but we have one position to discuss from one of our participants, which was sent to the contest. And actually, I put it on a chart, so right now you should see it, and I also will add some explanation which was attached to that trade, where we can see the why it was proposed. And basically, if I understood correct, so it was proposed here to buy, like on the 4th of October. It's, let's say, JP Morgan Chase stock. So one day before dividends. And it was
dividends or earnings. I'm checking it right now. Actually, I'm going to see
dividends.
Dividends, JPM. Okay, all right.
So it was the day when it was proposed, the 4th of October, when it was proposed to open a trade.
Yeah.
And dividends should be on 5th of October.
Okay.
And it's long position.
Okay.
So as we see, let's say right now, it was quite good movement up.
Yeah. And then the position was held through the weekend. This tall bar, this tall tail going up, that was last Friday. And that's when JP Morgan had earnings. So JP Morgan had earnings, it gapped up at the open, went even higher, changed its mind, and came down. And first of all, I think it's very, very dangerous to hold positions into earnings. Dividends, not too bad, but earnings are very dangerous. And this person held position into earnings, and he actually, his lottery ticket worked. The stock went his way. That would have been a great place to grab profits. Now it's slowly coming back to reality. but there's still some profit left. I wouldn't be hanging out for too long waiting.
Well, actually, the point is that it ticked the stop loss, which was, let's say, this red line. So it was proposed on 4th, then on dividends, which normally stocks declining on a way of dividends, it went down, triggered stop loss, and after this, it went up. So that's why I decided to
I see.
So probably to find, let's say, if, let's say, the next day dividends is not a trigger to wait, so maybe it also can be, let's say, some additional triggers which can make person to trade.
You know, when I trade, I have a spreadsheet in which I plan my trades. I have a spreadsheet in which I plan my trades, and then I have a program called Notes where I keep all my visual records. So when I plan my trades, first, of course, I put the ticker name, and then I have 4 vertical columns, which I call barriers. And if one of those columns tell me don't go, I will not trade. I will not trade that. I will not even look at that stock. I will not work up the stock. Earnings, dividends, short float, and volume. Volume to me, trading in the US has to be at least 500,000 shares a day. If the stock doesn't have 500,000 shares, I don't even look. That's it. Below 500,000, let's go next. But to me, trading before dividends, trading before earnings, especially earnings, because dividends, at least you know how much they will be. But earnings, you don't know. It's a dangerous game. Trading is dangerous as it is. Let's not make it, let's avoid some dangers are unavoidable, right? You wake up and, some kind of great announcement came in. But some announcements, we know them in advance. So let's just stay out.
Thank you, Alexander. I hope that it also will help to our participants to make notes, let's say, for his, let's say, future trades, or let's say for different activities, and for our other participants also to have, let's say, this example and to think about it, how to trade during such period, or better not to trade, because normally even each class we show at least one example where it was before earnings, and it was, let's say, some suggestion of such trades, and we see how the reaction like on such trade. Okay, thank you, Alexander.
Roman, I just looked at the thing. Somebody is asking parameters, is it 26 EMA and 3 ATRs? Yes. Octavian is asking, can I repeat the columns titles? So it's earnings, it's dividends, it's short float, and average daily volume. So those things have to, for example, if it's less than 500,000 shares, no go. Short float, if it's more than 20%, no. I cannot be shorting that stock. I can buy it, but I cannot sell it short, because a stock with a large short float is liable to skyrocket. Happens.
Thank you, Alexander.
Sure.
And back to those stocks to discuss today. So I opened chart and I added the first one, which is Lululemon.
They had earnings, I think, yesterday. Lululemon, yeah.
Give me a second.
I can check if you like, because I have this thing on my computer all the time. Lululemon. I remember looking at it. No earnings.
Yeah,
they had earnings in August 31. Yeah, strange. So for whatever reason, then when I see a big gap like this, my first thought is earnings. Must have been some piece of news. Look at this weekly chart. Lululemon gaps up, runs higher, and now it's trading below the midpoint of the weekly bar. The impulse system is, I think it's green. Yeah. We look at the daily chart, and we can see there is a gap and a failure to continue, and now the stock is sinking. My hands are itching to sell it short, but I'm looking at the impulse system and I'm saying, not allowed, not allowed. Itching to sell it short. But it's certainly too late to buy because, I want to buy below value. And this stock right now is in the manic territory, above the envelope, mania.
Thank you, Alexander. Another stock, which we also previously, of course, discussed many times, and now it also came back to the stage. It's Boeing.
Yeah. Actually, I have a little position in Boeing, established it yesterday. We look at the weekly chart. Boeing has fallen from $240 to about 180, so it's 25% decline. And you can see how on the weekly chart how this decline slowed down. We see that the impulse system changed its color from red to blue. So the weekly chart says Boeing is legal. We can see force index, those two little red arrows show there was a selling panic. And with all the selling panic, it failed to push prices any lower. So I got bullish about it. We go to the daily chart, and there is a very nice double bottom there. I know the impulse system is red, but this is one of those situations where I allow myself to bend my rules. Doesn't happen often, but here, because of the strength of the weekly signal and the double bottom on the daily, I did a toy size trade, long Boeing, and I'm looking at it today. Well, I think I may take profits on it before the day is out, because Boeing came to the value zone and it's now starting to sink away from value. So I got a very good price on the entry. Position is profitable, but I think that's it. Little toy size trade. Time to go home.
Thank you, Alexander. Let's look at another stock. It's FANG ticker, FANG.
FANG. Trying to think, what is it? Sounds awfully familiar. 1 second. Let me take a look. FANG. Okay. Oh, it's oil and gas. Okay. If we look at the daily chart of FANG, we can see that anytime there is some great news, FANG goes near its upper channel, and that's it. And then a bearish trend begins. And that's where it is now, near the upper channel. Overvalued, above value. If we go to the daily chart, FANG is in a crazy zone. It's above the envelope. The impulse system is green on the weekly, green on the daily, meaning we are not allowed, I'm not allowed to sell it short, but I am allowed to look at it and to wait until the impulse system changes color. Because I think there is a short coming up here, but not today, not today.
Thank you, Alexander. Let's look at another one. It's Adobe.
Adobe, yeah. Wow. Huh. Very interesting. Very interesting. This is writing a note to myself. to look at Adobe after the class. What was it last time I traded after the class? I think it was Microsoft. Yeah, I've sent you an email the next. Yeah, next day I sent you an email. Something came out. Got to trade it. So Adobe, it's they produce design software for design, and now they're getting into AI and all these other wonderful things. So we look at the weekly chart, and here we see a clear double top, a very clear double top. If you could check high prices on the first top and on the second top, but that it looks like the second top was a little higher than the first, which is wonderful. This is false upside breakout. The impulse system is still red, and I wonder what I think you may have a feature in your software which will tell you at what level it will. I'm sorry, the impulse system is green. I think you have a feature in your software which will tell you at what level it will change from green to blue. I think so. Double check. So it's getting very close to a short. Double top. We go to the daily chart. We see the same double top. There is no MACD histogram diversions. There is a force index divergence at the right edge. And interesting enough, the impulse system has already turned blue. So the daily is already saying to us it's legal to sell it short. I would want to know at what price level the weekly bar will change color and try to hit Adobe there. I can check it actually on my computer. And it says Adobe weekly crossover. This week it has to. This week it's far away. This week it's at crossover point is at 540. That's $24 away. Too far. Next week crossover point is 553. That's more realistic. All right.
Thank you, Alexander. Another one is Nvidia. After declining.
Yeah, there were all these wonderful articles saying that Nvidia is the future. It's going to be $1,000 stock and everything. And where is my $1,000? It's now in the low 400s. Nvidia Nvidia was hyped up because they produce a chip which is essential for artificial intelligence. And what happened was yesterday it had a very bad day, and today a little bit too. The U.S. government put more restrictions on sales to China. And so Nvidia is basically losing a big sales channel, and the stock that's the fundamental for the stock. That's why it was down yesterday and it's down today. So in the short run, I think it just wants to continue going lower. Long term, we'll see if it can stabilize in the value zone, because on the weekly chart, Nvidia is already in the value zone, and that's kind of a fairly normal thing during a big bull market. So I'm not going to guess the future, but I'm going to watch the thing very closely and see whether the impulse system on the weekly chart will stop being red. Right now, both weekly and daily are red, so no buying is allowed.
Thank you, Alexander. And last one in the list is VF Corp.
Let me just check it again. Also, I don't recall what it is. VF. I'm sorry. What's the ticker there? Oh, VFC. VFC. Okay. That's a peaceful industry. They make clothes. Well, it actually looks very nice on the at the right edge of the chart. Look, there was a false downside breakout, right? If you put a horizontal line below this first bottom, somewhere here, false downside breakout, beautiful bullish divergence of a MACD histogram, force index, everything. The impulse system changed color to green. We're a little late because the stock has really rocketed this week. Let me see. It had it had earnings. Wait a second. October. Oh, earnings are coming out. It hasn't even had earnings yet. The weekly chart looks very attractive. The daily chart is overvalued, overpriced, and that's another stock I would put on the wall and say, pull back to value on the dailies, I'll go shopping.
Thank you, Alexander. We looked at all stocks in the list, and I think we have a couple of questions.
Yeah, thank you. So Javi is asking, when trading a bullish divergence of prices in a MACD histogram on a daily chart that might evolve as well in bullish divergence on a weekly, do you always wait for the impulse system to become blue on the weekly, or do you open the long position as soon as the MACD ticks upward on a daily close? What I would be inclined to look to be very, very strict, and a beginning trader should be very strict. You should wait for everything to be in your favor. So not putting on a position while the weekly chart is weekly impulse still red. If you're a more experienced trader, you can evaluate the chart and see for yourself how close it is to a reversal. And finally, what you can do, instead of buying or shorting something in one shot, you can say, well, I'll divide my planned trade into 3 steps. And when I see the daily reversions, I'll do the first third. When I see the weekly reversions, I will add 2 more thirds, something like that. It's not like there is a cut, like black and white answer. So I try to give you a little bit. For a beginner, absolutely, both impulse systems have to be, cannot be against you. When you become a little more, when you become a lot more experienced, you can sometimes bend it a little, and compensate by reducing trade size. Another sort of several questions came in. Your chart on the capitalization weight new high new low index shows that new highs are formed CSV file for 52. No. Both new highs and new lows are 1 month files. Absolutely. Second, what advice would you give your younger self today in the area of trading? I would say keep good records. Show me a trader with good records, and I will show you a good trader. Show me a trader with bad or non-existent trade records, and I'll show you an average trader. And an average trader is a very sad sight. Keeping records allows you to learn from your experience. Most people go forward, and making the same mistakes again and again. I find that keeping records is what does it for me. I have records probably of more than 99% of my trades, showing where I have charts, and I mark up where I entered, where I exited, what was right, what was bad. And I review those things every once in a while. Keep good records. Keep good records. You see this the chart that that Roman with Admirals is showing to you. This is a type of chart that I just take a picture of this chart. There is a wonderful program called Snagit, SNAGIT, and I use the program to mark up the chart, and then I put it into my records file. And one more. Which author had the biggest influence on your trading? There wasn't any one. I've read everything. When I got into trading, that was a long time ago. I've read everything. You cannot do it today because the number of books has just gone huge. But I can name a few books that were very good. Technical Analysis by John Murphy. It's a very good book. There's a very good book about trading psychology by a man named Mark Douglas. And that's about it. That's about it. Read my book.
Of course, The New Trading for a Living.
Thank you, Roman. Thank you.
Thank you, Alexander. I think it was quite intensive class. So we went through a big amount of stocks, answered questions. Thank you, Alexander.
Thank you very much, Roman. And just to repeat what I started from, this is really not a normal time right now. And so my advice to anybody is not to do normal size trades, right? To reduce until the situation clears one way or the other, to reduce trading size. This is not normal time. Let's be much, much, much more cautious.
Thank you, Alexander.
Thank you very much. I'll see you.
I wish you a good day, and we'll see you on this class next month in November.
Looking forward.
Thank you, Alexander.
Thank you.
Goodbye.
Bye-bye.
And dear participants, as I promised at the beginning of our class to say some words about indicators, so I will do it right now. So as you saw a couple of minutes ago, as I showed MT5 platform, we have an options to offer to our clients to install indicators directly to your MT5 platform from Admirals. And we have, let's say, this offer for our clients with real accounts where balance is higher than €200. And if you are already a client of Admirals, so everything you need is just to send a request to elderdisk@admiralmarkets.com. For those who are watching us now in Zoom, I will send this email in chat. And for those who are watching us already on a YouTube channel, that email will be available in description to that video, of course. So just to make it easy. And if you're not client so far, so anyway, you can send your request and our specialist will contact you and tell or help or explain how it's better to open an account, and will consult about all probably questions which you have. And together with indicators, we send also chart templates, so it will allow you to set up your table as you saw just a couple of minutes ago on my screen, and also video tutorial for installation of those things. And for our contest. So today, unfortunately, we don't have a winner of our contest, but we normally have. And today we had only one position which we reviewed during our today class. And I think it was quite interesting to speak about it as usual. But I want to encourage and to remind that we have a contest where it's possible to win the book, the latest book, The New Trading for a Living from Dr.Elder, directly with his signature, with his personal signature here. And we have this contest under our YouTube channel. So basically right now I will send one more time link to Admirals channel. Just give me a second. And of course, if you're already on our YouTube channel, so you are already on a direct place. So here the link for those who are watching us now in Zoom. Please go and subscribe. And what are the rules for the contest? So first of all, to be subscribed on Admirals YouTube channel, of course, like the video with the recording, of course, and don't hesitate to like it anyway if you don't participate on contest. It helps to YouTube algorithm to promote our videos better, and it's will be good for that video. And in comments, suggest a trade for one asset that is traded in Admirals. And as I said, we have around 8,000 different instruments, so it's quite easy. What should be a suggestion? So basically, you need to propose an instrument, entry price, stop loss level, take profit level, and date of post. So here on the right side of my screen, you see an example. So we are here. I propose a trade where we'll go short by price 1 163. My stop loss will be on 166, and my take profit will be on 151. So it, let's say, some sort of paper trading where you plan your position in advance, or even it will be executed on the same day. It's also fine if you see right now in a moment that, okay, now it's a good position, I will enter the market right now, do a comment on our YouTube channel, and it will take part, let's say, on our contest. So we have a time frame for the contest. It's from one class till another. So next class we are going to have on 22nd of November. So we have a little bit less than a month, but quite big, let's say, time frame to take part of this contest. And this position should be triggered during this period. Ideally, so we take a preference to those positions which are closed by take profit. If there will be no such position, so we'll choose the position which will have an open, let's say, plus level. So I want to encourage to take part, and also the last but not least, it is prohibited to edit comments. So this is pretty much it, rules for the contest. And of course, if you have questions to Alexander and you want to ask him something, because we have a limited amount of time during our class, it's 1 hour, and we want to spend this 1 hour as much as efficient as possible. So normally I collect all questions in advance, send them to Alexander also in advance, and then we don't have we're not spending time for reading and for so we are able to cover, say, more instruments or more questions. So if you have a question to Alexander, so please submit it in a comment to the latest video with Alexander on Admirals YouTube channel, and it will be answered for sure. And try to formulate it as short as possible, of course, and don't ask, let's say, quite complicated questions. And of course, if you have chance to read Alexander's book, do it. Or, as I said, you can also watch, let's say, some previous recordings where it was, let's say, different discussions, different instruments, and to get deeper in his method. And of course, you can practice on MT5 platform with Alexander's indicators, which are available for Admirals clients for free of charge. So also send us a request if you want to get your package. Thank you. It was quite extensive evening. So I wish you a good rest of the day, rest of the week. And our next class will take part, as I said, in November. So see you all on the next class with Dr.Elder. I wish you a good day and see you next time.